It was a very interesting call. I participated in the call, and the good news is there were no surprises. They're trying very hard to be transparent, and it's almost impossible. But they're trying very hard. Every quarter they give more information. I thought the summary I just heard was certainly what I saw. Flannery has a very difficult hand. There's no question about it. I mean, this is he's not, he's upright about it, and he's got some, aviation is a great business, and the healthcare business is looking very good, and it will do very well out there on its own. Renewable energy is kind of it's a little bit of a surprise that's having such a difficult at this moment, but but Baker Hughes they got $220 million of profit, this 85% improvement. So they're back in the game, and that's going to be helpful when he wants to exit. Power is difficult, and but the world needs power. The power growth is there, and they just have to get their share of it and have to get back in the game. It's probably 2 or 3 years for that one. I wanted to
Bob, when you say he's got a very tough hand, the challenges in front of him, whether it's portfolio management, obviously power, this trade discussion that we're getting deeper and deeper into every day, or the long-term obligations, what's most addressable first?
Well, I don't think the trade issue is a big deal because, and he explained it as well, they can buy things from China, buy parts from China, and pay the tariff. But when they include those parts and items that they ship out, they get credit. So they probably, in most of these cases, because their equipment, a lot of equipment goes around the world. They're not going to have that much of an impact because many of the parts go right back outside the United States. That's what he was trying to say.
He does say, though, in the call, we're a company built for fair and open trade, and hopes that we reach a sensible negotiated conclusion. If that doesn't happen soon, what does it matter?
Well, I'm saying it doesn't matter as much as you might think. That's what I'm trying to say, because of the fact that the equipment that would be subject to it, it was generally included in an item that goes somewhere else outside the United States. You get a credit for that. So I think that's the least of his problems. One of the things that I had to mention to you, though, it goes back a number of years, and it's just so the tough hand he has. He's got revenue to compare him to Microsoft. Microsoft's revenues is 103 billion, maybe a little more than that, and GE's is 120, the same. Microsoft has it's increased value 44% this year, and GE is down 49%. The cap of Microsoft is $825 billion, and GE is 114, and it's just absolutely, the EBITDA of GE is 3.3 billion, and Microsoft is 43 billion. Now, these two companies, Microsoft was a much smaller company than GE for almost all that period of time, and just the cloud has just turned them into a monster. Flannery had to park that industrial program that ML put $4 or $5 billion in. Maybe that can be resurrected. Maybe that can be moved from just being in the equipment that GE sells to other people. But he needs some spark in there in that power area, and so maybe it's a piece of design. I don't know, but it's just so sad to see the scale just flipped right around there.
Yeah, and Bob, certainly earlier this week we did actually see news that GE and Microsoft are deepening their relationship around the cloud and digital industrial internet. I want to get your thoughts. There's a lot of focus.
Ironically,
on the
they didn't emphasize that in the call, and nor did anybody ask a question about it.
Yeah. I wanted to get your thoughts. There's a lot of focus on the pain and power, but it seems to me, in terms of turning this company around, the other key area is going to be GE Capital. How would you envision that being unwound?
Well, they're trying to put GE Capital in a runoff, and just trying to run off the runoff in down the assets. They hope to get it to break even because they're not taking on business that's not GE business much at this time. So they're going to run it down. It's going to be an in-house support system, more or less. That's very attractive. That works. But it's not GE Capital anymore. It's part of GE. It's just a division of GE now. It was a separate company up until a couple of years ago.
Bob, finally, can I ask if you're buying any here, selling, holding? What are you doing?
Well, I sold a lot of GE at about 20, and that was the 50%. That was down from 30, and I still have it. I have GE out of my ears and all kinds of things in plans. So I want to cheer them on here. It's just very difficult work, and you can't. He's going to have to get a couple of breaks in there with some product, perhaps, maybe an acquisition that just really fits. But there's something's going to have to, happen to get him moving along.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.